All right. So good morning, guys. I hope you've had a lovely weekend. My name is Samson Mzera, and I'll be taking you through the market snapshot for this week. So just to get quickly into it, we will go into what happened last week, how it has affected the markets, and then from there we'll come back to this week and see what it is that we'll be expecting. So I'll head over quickly to the Forex Factory calendar. And last week was quite interesting because we had mainly the focus was on the US markets, and that was what a lot of investors were looking for to know where to take the markets next. So I'll just touch on the key events that happened last week. And this was the inflation report that came in on Wednesday. You can see the report came in lower than expected, which of course had a certain impact on the market that we'll look at. And then the other key event that came in last week was the PPI that was on Thursday, which also came in lower than expected. Just a minute, let me confirm. Yeah, the mic is on. So if you can hear me, just say hi on the chats while you continue. Okay, so on Thursday we had PPI, and then on Friday we had something interesting, which was comments from the Fed. So let me switch to the charts to see how that transpired. Share my chart. Okay. So I'm hoping you can all see my charts. That's on XAU. Okay, so yeah, the charts are clear. So for CPI, what happened on the gold chart, for example, we had this spike up that was on Thursday, and then after that we had a spike down, and then we had another spike up when the PPI reading came in. So investors are basically building a story on this. First, we had inflation coming lower than expected and PPI coming in lower than expected. That's basically telling you two things. Number one, the economy seems to be cooling down. That's the US economy. And if the US economy seems to be cooling down, then chances are the Federal Reserve might adopt a softer stance on inflation. And that's why we saw this weakness in the dollar, which corresponded to a strengthening of gold, both on Wednesday and on Thursday. And then that's the same story when you went to, that's the same story when you went to Euro USD, which we had the same impact. So this one was much more clearer. We had Euro spiking up when the reading came in and PPA spiking up when the reading came in. So basically, the sentiment or the mood in the market is we might have general weakness in the dollar, and that's reflecting across the board. And today we're anticipating. So let me bring that in for today. So today you're anticipating a manufacturing report, and the story is going to be practically the same. Are there signs of weakness in the market? And if any news comes in showing that there is signs of weakness in the economy, then you might have further weakness in the dollar. But then there's something interesting that happened, which was on Friday. So this is today's report. We'll talk more about this in a minute. This is the Empire State Manufacturing Index, which simply shows you or is a survey of what is happening in the manufacturing sector, which is a very good indicator of where the economy is headed to. Now, before you get into this, something interesting happened on Friday, which was the comments from the Fed. So if you look at your chart, if it's gold or Euro USD, then put this here. If it's gold or Euro USD, you find that we had this drop over here. Yeah. In as much as retail sales came in lower on that day, we still had this drop, which was from the Fed comments. So the Fed is more likely than ever going to be hawkish at the moment. And I think I think because we have a lot happening in the market and we have a number of Fed speakers this week, that might be a reason to watch for the market dropping or the dollar strength coming back into the market, although it wasn't as long-lived as anticipated. So in this case, we had a push, 2 pushes higher for 2 days, and then we had this drop, which came in when the Fed, let me put it that way, which came in when the Fed comments basically started touting for higher interest rates and that there may be higher interest rates for longer. And that caused this sharp move. But I don't think the market is convinced that we might have higher interest rates. Although if that is the case, then a break below this key level, and this is Euro USD. So there's a level at, so let me just add this objects. So there's a level at 97.09 where we had on the daily chart broken it for the first time. So let me put this here. So Euro USD seems very hesitant to go higher. As you can see, we tried breaking the previous high, we failed. So on the back of more hawkish comments from the Fed, or where they're touting that there might be higher interest rates, then we might see Euro USD coming back down, possibly respecting this channel that we've been forming for the past few days. And in that case, then 97.09 might be a key level. If price breaks this point, this is on the daily chart, then you might see it go lower to this point. However, the sentiment in the market is the economy is weakening. And that means you might have either a pause or slower hikes in the near future. And if the market is pricing that, then that's definitely going to be bullish momentum for the market. So in this case, 2 levels to watch out for Euro USD. If we break beyond this point, then we might see prices going lower. And if we break this key level, just a minute. So if we break this key level here, so this is objects. Yeah, there. So if you break this key level, then you might see us going back up to this supply zone over here. So that's the same case for most of the dollar pairs today. I'll try and see, for example, gold, which is doing the same thing. So we've broken structure in this case, and we might be looking to head all the way up to this supply zone in the event that our news report, let me show you, yeah. So in the event that our news report here, the Empire State Manufacturing report, comes in negative. So in this case, if we come in lower than expected, then we might see further dollar weakness, and that means more bullishness. Then one thing to note, as we've said, is on Thursday here, we have the same guy who caused the market to drop yesterday, on Friday, that will be speaking. And this is Walla. So on Friday, he said we might need more interest rates to come in, and that caused a bit of strength in the dollar. As we look at that, let me also see how the indices reacted. So we look at NASDAQ. Let's see. Okay, yeah. So same case, we had a high over here that NASDAQ has been trying to break for the past 1 month or so at this point. And then you can see that the weak data basically led into NASDAQ trying to break higher. But in this case, the comments from the Fed made it go lower. So today, we have this supply zone in purple that I've highlighted in purple, where prices have been selling off. So every time we've come to this zone on the NASDAQ, we've basically had a sell-off from this point. And that's where we are at the moment. You're trying to get past this zone. Now, a bullish scenario would mean that we go and sustain levels above this point. That means if the market breaks and shows that it's respecting this level, that means it fails to come lower, then you have a bullish case. And what might support that? If we have a lower reading than expected today for the manufacturing report. However, because on Thursday we have OMC, then chances are hawkish comments will lead to us going back to these lows over here. So we have until Thursday, and today is Monday. So we have room for movement all the way down here. All right. So those are the two most important news events. We've said, so let me just, yeah. Yeah. So we've said for gold, we're looking to target this level in the event the news comes really negative. However, for a bearish case, then we need to sustain levels below this channel, because for gold, we have a channel that has been forming both on the 4-hour and the 1 hour like that. So if prices are sustained below this point, then that's a bearish case. However, if the news comes in positive, then this might be the target for the day. Next, we have, again, euro. And this one also will represent everyone trading the index, dollar index. You're looking at this level. If the market sustains prices below this, that is, we go lower and we fail to come back above this point, then the next stop for us will be at the channel at the bottom like that. However, for negative news on the Michigan sentiment, then we'll be looking to get to these highs over here. I've marked this area because it's a supply zone. I think it's part of the YouTube series that we do in the evening, so you can go reference those. However, this might be a very interesting target for the day because of the news. And then lastly, for NASDAQ, again, probably at 430, that's when we start seeing a lot of volatility. But at the moment, if we sustain levels above this point, then that's a bullish case for us. Probably try to reach for previous highs that were made. In that case, have that point over there. Okay. Any questions? Hi. Okay, this is a question. Hi, Sam. When you say US economy is softening, how will this cause DXY to strengthen? Where else in the circumstances? First GDP. Okay, that's a good question. So, I've used Euro USD in the analysis, but you know that when you're using Euro USD, it's basically the inverse of DXY. So if we have, and this is something you can go check, if you have a channel up on Euro USD, we have a channel trending downwards on the DXY. So the economy is weakening because last week we saw signs that things are cooling down. So for example, let me switch the charts. Let's go back to Forex Factory. So there were 3 important releases last week that confirmed that things were cooling off. The first one was inflation. We had for the first time lower inflation than expected. And this hasn't been going on for a while. That's number 1. Number 2, we had PPI. So PPI is for producers, which also came in lower than expected. Now, if inflation is coming in lower than expected, both for consumers and producers, that's the first sign that things are cooling off in the economy. Then lastly, we had retail sales on Friday, which were also cooling off. So first off, retail sales is usually a leading indicator, a leading economic indicator, showing that it gives you a heads up on what is happening in the market. So if retail sales are cooling off, then chances are demand is also cooling off, and that might feed back into our inflation reading. So usually retail sales is the first one to give you signs of what is happening to consumer inflation. And if these three are cooling off, that means the US economy is slowing down, which in turn means that the Fed, the central bank, might start thinking of cooling down with what they've been doing with the dollar and strengthening it. So chances are investors will start expecting a weaker dollar, and that now feeds into our charts. So you've said so let me go back to our charts. Yeah, so now that feeds in back to our charts. So you've said any sign that the economy is cooling down usually causes a weaker US dollar. And in that case, we saw the first one here, which was CPI. We saw this spike up. We've seen a spike up in PPI when the reading came in lower. So these two are showing signs of a weaker. When the reading came in, you're seeing signs of a weaker economy. And then on Friday, we had something different. We had hawkish comments from the Fed. So just a minute. Yeah, so we had hawkish comments from the Fed, and this interrupted what the market was expecting. However, the sentiment in the market is starting to build up, and every time we see the narrative right now is the US economy might be weakening. So anything that feeds into that narrative is probably going to build up to that momentum. So for example, today we have, and this now is feeding into today's news. Today we have on the calendar, let's see, on Monday. Yeah, we have the Empire State Manufacturing Index. So this one is tracking manufacturing. So remember that the main narrative is what is happening to the US economy. Now, how does this report fit into that? If you see a weaker figure, then it builds up on that narrative that the US economy might be weakening. That's why I think 3:30, these news releases, they normally don't have a big enough impact on the market. But I think for this week, we'll have quite large impacts, especially on these softer, medium impact news releases that feed into what the economy is doing. As to how it affects pound and I think euro, do you have comments for euro? Yeah, we do have comments. So we'll be looking into that. But the main event still is investors are trying to form a narrative. Yeah, we have the ECB president speaking, but investors are trying to form a narrative of what is happening with the US economy. And then from that, now you can build on what's going to happen with euro, pound, and all these other currencies. However, we'll still be here in the evening. I think we'll still be talking about it, and tomorrow morning. So we'll follow up with what's happening with the pound and the euro. So the next question is upcoming news effect on the US dollar. Again, I think I've covered that. Based on this alone, we're trying to see if the narrative holds. Are we having a weaker economy or a stronger economy? If it's weaker, dollar might be weaker. And we've explained how that affects the market from the charts. Any other comment? Bailey said you will get into a recession, but GBP is strong. How comes? DXY softens yet interest rate parity. Okay, so Bank of England governor will get into a recession, but the pound is strong. Okay, so interest rate parity, usually there's a lot of factors that get into it than just a simple equation showing the difference between two interest rates. However, on the long term, that should realign. On the short term, again, the trend of the market is dollar weakness, which might feed into other small segments. Once the market has figured out, because we have some level of uncertainty, once the market has figured out how or where we should be heading next, then I think the other things will realign, including the strength of the pound and the comments, even with Japan, the comments of the central bank governors. Yeah, I think that's it for the market analysis today. Let's see how it goes for the day. 3:30 is a very important time. So if you're trading, make sure to leave an alarm for that. See because it might set the trend for the rest of the day. So there might be good entries in any of the dollar pairs or commodities. Any more questions? All right, so I'll just wrap it up. Coming back to the charts, that's what I'll be looking at, and a lot of traders from here. And let's see how the market goes for the day. Otherwise, thank you for attending. See you again tomorrow. In the evening, we have a webinar also, so you might check that out from around 8. Yeah, and have a great trading day, everyone.